indices, guys. It's another day to make good money, good cash, positioning ourselves at the right place of the market. Low prices for buy, high prices for sell. And of course, we can make money for ourselves. So, guys, a little sound check here. Check whether you can hear me, guys. Get to the comment section, the chat room, guys. Can you all hear me? Little sound check, please. Can you all hear me? Okay, so the number in the room is just gradually improving and increasing. So, guys, let's just give, okay, thank you very much. You guys can hear me. Let's just give a little time, maybe 2 to 3 minutes, so that we can come back and then start analyzing everything. Okay, analysis without paralysis, that's what we're going to do for today. So, guys, thank you very much. You can hear me. Let's open the door wide open, right? No, your gate shall continually be open. Let's open this gate very wide for more persons to come in. And of course, maybe 2 to 3 minutes, we're going to start. Thank you very much, guys. All right, guys, good morning. Good morning once again. This morning market review. I think we have a full house right now. So let's get started. My name is Emmanuel, Morning Market Review. So we do this every trading day. Every trading day, Monday to Friday, is actually one solid hour of market analysis. We analyze the market for you, tips and tricks on how you can navigate the market profitably. We don't forget to give you reviews of what the market have done, previews of what it will do, so that you can position yourself very well. And of course, be profitable. Okay? Be profitable. In fact, our slogan word for today is be profitable. So if you can hear me, get to the comment section and type be profitable. Be profitable. Quickly, let's look at fundamentals very fast. So I'll just share my screen right now so that we look at fundamentals. So fundamentals are the main drivers of the market, right? So you don't analyze without looking at it, right? You don't analyze the market. Okay, it's be profitable, not comfortable. So maybe Mr. I'm trying to mention your name now, Mr. Alide, right? Is be profitable, not comfortable. Comfort is not a good place. Comfort zone, nothing goes there. Okay, so be profitable means be uncomfortable. All right, guys. So let me share my screen real quick. So, guys, I've been able to share my screen. Wow, there is a lot of red news for today. Okay. So, for the sake of those of us joining us for the first time, please confirm whether you can see my screen. My screen. Okay, fine. So today being Thursday, the 5th of February, wow, blessed day of the Lord. Guys, these are the red news we have for today. So this is the time of the day of the news, right? Actually, Nigerian time, our time, local time, I mean. Then, of course, this is the currency it will affect. Now, this is the impact. So whenever we open this calendar, we just focus on the impact, right? So we look for the red impact, the high impact, the dangerous impact, the one that can affect and move and drive the market. Okay, so for today, you can see a lot of red news, guys. That means there is no sleeping on the chart today. Come on, guys. There is no sleeping. There will be whipsaw. There will be up and down movement. So across the GBP, across USD, across Europe, across the Canadian dollar, the Australian dollar. Of course, we have bank holiday in New Zealand. So for GDP, which we're going to start with, right? So that's by 1 p.m. So actually, they have their interest rate statement, interest rate policy, and of course, their bank rates vote, everything for concerning their interest rate for today. And it's going to be by 1:30, right? So it's not something we are just going to try to forecast. No, we are just going to stay tuned to that time, right? So BOE, Monetary Bank of England monetary policy report. Now that one is a report. So report is actually non-data news, right? So reports are non-data news. That means we don't expect to see any data here, right? So it's a report, it's a speech, right? Also, summary of the monetary policy at the same time is a non-data news. So after members of parliament must have voted, MPC, Monetary Policy Committee, official bank rate vote. So these are members that are saddled with the responsibility of maybe voting, whether they should keep interest rate, hike interest rate, maintain it. So they can vote in this order, 720, increase, hold, decrease, something like that. So guys, so that is the number that we are expecting, right? So we're expecting that by 1 p.m. 1 p.m. So by 1 p.m. for today, we'll be expecting to have an actual here, right? Now that actual will determine whether the pounds will be strengthened or it will be weakened, right? So it tells you what the UK economy looks like, right? So what they are looking at. Is this economy expanding? Do we need to hold the rate or we need to increase the rate such that investors will be more confident about the economy, right? So because when they increase rates, investors will like, hey, there is a higher rate there, let's go there, let's push our money there. Something like that. So we now have the official bank rate. Now this one is in percentage, right? Okay, so all of this will be happening by 1 p.m. Then of course, after that 1 p.m., the governor of the Bank of England, right? That's the Bailey. He has been there for quite a long while right now. So he'll be speaking, right, concerning what has happened. So most times, if the move does not happen by this 1 p.m., of course, we'll be expecting that move by 1:30 p.m. Okay, so just between 1 p.m. and 1:30 p.m., guys, a lot of hoo-ha will be happening on the market. So there will be a speech to describe and to sensitize members of the public what has actually happened, why the rates or why the voting went the way it went, all of that. So that alone will tell traders or to give clue to traders what the market is expecting. Okay. Now by 2:15 p.m. we have the May refinancing rate. That's also rate statement. So rate statement is across Europe, right? Major economies, Europe, and of course the UK. Okay. Now May refinancing rate, that's the rate statement also, right? That's the rate policy rate actually. Then we have monetary policy statement. So this one is the rate, right? Then of course it's actually 2.15%, right? For the forecast. So the actual is not there yet. Now, then, of course, the statement to back up it. So by 1 p.m. to 1:30 p.m., that of the British pounds, and of course, by 2:15 p.m. all the way to 2:45. So that means just the whole of from 2 to 2:45, ECB press conference, right? Of course, by 2:30, we have, of course, our weekly unemployment claims in the US. So, guys, if you trade Euro USD, GBP USD, which I know you do trade because they are the majors, guys, today is going to be we're going to having enough movement, right? So it doesn't stop you from taking your trade this morning, this London session. It doesn't stop you, right? But it just means your trade should have, as the custom will always be, stop loss and a take profit, right? To protect yourself, to protect yourself. Otherwise, the market might just move in your direction heavily and give you the kind of profit you never bargain. Somebody say, "Boy, Emmanuel, why not?" Now it can equally move against you and give you the kind of negative you never bargained for, right? So in order to keep yourself safe, then you want to do the right thing, right? So the right thing in trading is always, as a day trader, as a intraday trader, take your trade, put your stop loss, and take profit. Don't forget that. Don't forget that. Most people say, but Emmanuel, but it can always come back to me if it goes bad, right? It can always come back to me if it goes bad. Your it does not always come back. It does not always come back. So we have jokes for today. That's a job opening and labor turnover survey, right? So this also gives some kind of clue of what NFP will look like. So this one is for job openings. Now this is not employment, but this is openings. Openings. Are there openings, right? Something like that. Now we have Bank of Canada Governor McLean speaks, right? So Canadian dollar might see some kind of movement by 6:25 p.m. Then of course to wrap it up for today, we have the Reserve Bank of Australia, Governor Bullock speaks. Governor Bullock speaks, right? Then that's for to wrap activities for Friday, right? For Thursday rather. Then for Friday we have other news. So for today, guys, by 1 p.m., by 1:30 p.m., as a summary, by 2 p.m. all the way to 4 p.m., a lot of movement. But for now, this is just 8 o'clock, 17 minutes past 8. So let's analyze the market and catch the move of the market this early morning. Okay. So I'm going to switch my chart right now, real quick. I'm going to do it. Let's look at analysis without paralysis, right? So let's go straight to our chart. So you tell me what you are trading. You tell me what you like to trade. They will analyze the market together. Okay. So let's start from Euro USD real quick. So Euro USD on the 4 hours time frame, what does it look like? So on the 4 hours time frame, what does it look like? it looks like this. So we saw a very big, where's my drawing to now? So we saw a very big movement to the upside. Afterwards, it was followed by what? A big downward movement, guys. And this one is not yet over, right? It's not yet over until it is over. So we are right now experiencing a reversal on the market, right? And the market has printed for us a low right here. So there's a low right here the market is actually battling with, right? Mm. So there's a low. So that low is what we call a support. But if you look carefully, this is a triple low, relatively equal lows, right? So of course, we're having a lot of stop losses hiding behind it. Of course, guys, stop loss is what we call liquidity, okay? But it's not the only liquidity. There are other liquidity, but it's one of the liquidity. One of the liquidity. So by the time you catch a low, by the time you see a low, especially on this particular time frame, this time frame that has the eyes of a lot of traders, be it day traders, swing traders, position traders, institutional traders, right? Of course, so there will be a lot of stop losses right here. So the market may just hold it for some time for it to build more or just crush it. But I'm very sure, very certain the market will crush this. When is it going to crush it? That is what we don't really know. It's hard to know that one except you're a prophet. I mean, it's hard to attach time in the price, right? Especially the exact time, the very millisecond, man, guys. But we know for sure that we have some liquidity trap around there, right? Those that will be looking forward to short the market if the market just break through this particular support, right? So that's their liquidity, right? Their liquidity. Those that have already long the market and put their stop losses there, they are equally liquidity. Those that have been holding their trade all the way from somewhere here, they have been holding their buy, expecting it to turn, adjusting their stops, adjusting their stop. Guys, the next place they'll put it somewhere. So guys, this low right here has a lot of liquidity, right? Has a lot of liquidity. So the market may just, hey, come on, guys, who doesn't like turtle soup? The market will just pum and take it out. Then, of course, maybe retrace back. But for what we are seeing, this particular line right here shows us that, hey, this market is a downward trend. But wait a minute, from year to year, if you switch over to a lower time frame, because we're on 4 hours time frame, guys, you see that that is really wow, swear. That is really a downward trend, okay? A downward trend. All right, guys. Let me switch over to a lower time frame. Let's see 1 hour first. It is this switching over from one time frame to another time frame that normally takes our time in analysis, okay? But guys, guess what? It's good. It's good to see from all lenses, all right? To see the market from different lenses. So this is 1 hour time frame, guys. For 1 hour time frame, you can see for over some days right now, even up to a week plus 1, 2, 3, 4, 5, right? That's a week. So the market has been on a downward trend, as you can see, downward trend, okay? And it has created for us this particular level where we are saying the market will come back to 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 lick it up, right? To lick it up. So, but one thing that the market may do is that the market may want to take out some high, right? The market may want to take out some high or even test this local resistance here, right? Because this is the opening price. Remember, this area I want to highlight right now is our opening price of the day, right? So opening prices are usually area of interest, right? It tells you where the whole story started from, right? For that particular day. So, so two things I will do. If the market retraces back, it has done that, but it's not really touched, right? If it retraces back to this area, then I'm going to place a sell, right? So I'm looking forward to sell. I'm looking forward to sell, guys. I'm looking forward to sell, right? So if it trades towards this area, I will sell. And of course, my take profit will be at the stop losses of these other traders all over the world, okay? So guys, I've given you a direction for Euro USD. I would like to sell. So it's not hidden. I would like to sell. I would like to sell if the market comes up a little bit. So let me just give you different areas where I would like to sell, right? So so this area is actually a fair value gap that has already been used, right? It's a fair value gap that the market have used already. But that's yesterday. So the market may just want to test it again, right? So these are areas where one can sell from, right? One can sell from this area. I'm trying to point it for you, right? So that would be, you can use a pending order to place a sell limit there. One can sell from here. One can equally sell from here, okay? Hmm. So guys, we are done with Euro USD. Let's look forward to that. Let's look at another instrument. Another instrument, okay? So our bias, our directional bias on Euro USD is to sell. Don't forget, right? Is to sell. So I've given you the areas where we are going to sell. So just wait a minute. Waiting is part of trading. Once the price gets there, you get to place your sell, okay? So if you have questions on this Euro USD, please ask it right now. If you don't have questions, let's go straight to the next instrument on our table right here is the Great British Pounds, guys. Very volatile this season. So Great British Pounds. Where are you? Okay, fine. So guys, this is GBP right here. So the same analysis on the H4 time frame, guys, as we always do. So you can see right now, it's actually nosediving, right? It's nosediving, it's facing downward. So we got this heavy push to the upside, right? Quickly followed through by a downward movement to the downside. And of course, if you look at this, if you zoom into this if you zoom into this particular one, you see that on the H4 time frame, that liquidity we saw on Euro USD on the 4-hour time frame somewhere here, the market have taken this one out, right? The market have taken this one out. So the market have traded below this one, right? So that means they have taken this liquidity. So don't you think Euro USD will just be trailing GBP USD? Of course, that was why our analysis on Euro USD is actually a sell, right? It's actually a sell because we are expecting the market to suck and lick up that liquidity right here, to lick up this one, right? So H4, H4. Uh-huh. So this is the low, right? This is the low for this week. So so this is the low. This is the low that happened. I think this is the Monday low, right? One, two, three, 1, 2, 3, 4, 5, 6. Okay, five. This is the Monday low. So the Monday low has actually been the low of the week, right? So that's the liquidity there. So for GBP the market have taken out. So for Euro USD, the same thing will happen, right? So Euro USD will just be trailing GBP. So guys, that's a clue. That's a clue. Okay, that's a clue because these two instruments are heavily correlated, right? So that it has happened on GBP the same thing will happen on Euro USD. So it has not changed our trend direction, right? It simply means it has confirmed for us, even with more of the fact that the market is now going down. So if you look at our moving averages has even changed direction, right? So the fast is now beautifully trailing or below the slow moving average. Okay? So I mean, 21 is now below 50 period moving average. So guys, if this is our verdict or our direction we are seeing on the H4 time frame, now let's take the charts down a little bit to a lower time frame. So that would be, let's look at 15 minutes, right? Hold on a bit. This one, did we look at 15 minutes? Did we consider 15 minutes? I'm not sure we actually see to 15 minutes, but 15 minutes is my darling time frame, right? It's looking strange. That means we didn't really switch to 15 minutes. So guys, 15 minutes is the entry time frame, right? So the time frame you should be looking forward to when you want to enter the market, right? So it's showing very well right here that if the market gets here, we will have some local resistance around it. So you can sell here, right? Or you can sell it. I think it's showing very well right here. So for those of you using phone, you can just screenshot this so that later you can go back to it, okay? So GBP. So guys, GBP USD, so this is 15 minutes time, right? So 15 minutes is heavily still pointing downward, right? It's heavily still pointing downward. So you just to look at for sell conditions, right? So the one of the things you should do is to learn how to follow the market direction. Okay, so the market direction is pointing downward. So what do I do? Then I will need some level of retracement, right? So the levels of the retracement would be, hey, opening price of the day. That's the first level of retracement, right? So what normally happens is that since this market is heavily going down for a day trader like this, as you can see, right? It's heavily going down, right? So what normally happens is that by the time those that enter sell, right, at these highs are still taking their profit, it means they are leaving the market, right? They are leaving the market, and leaving the sell trade is actually giving in or empowering the buyers, right? So that is why you should expect to see some level of retracement, right? So that is actually what causes retracement when sellers, or let's call them early sellers, have started leaving the market, right? Why? Leaving the market means they have started taking their profits. Everybody gets to leave the market, sir, right? I mean, leave a trade. That's what I mean. You place a trade, you're out of the trade. That's what I mean by leaving the trade. So leaving the trade means you are empowering the opposite side. You place a buy, you leave the buy. I mean, you close the buy. That means you have just sold, right? That's what it means. So that is the reason why there is need for retracement. So why by the time the market retrace, guys, our directional bias is still to sell, but we need a premium price, right? So we need a premium price. We need a premium price. So if you sell right now, it's also good, but then it's an aggressive sell, right? It's an aggressive sell. Mm, an aggressive sell, meaning that you do not give room, or you didn't wait for the market to do enough retracement before you are to sell. So guys, GPUSD, Euro USD, we've done that analysis. Let's look at more currency pair. We have a lot of time for today. We are going to do a lot of instruments for today. So get to the comment section. First drop currency pair, right? So USD JPY, this guy is just uh, this guy is just running to the upside, right? So of course on JPY too, our analysis will be to buy. So we are seeing sharp reversals on USD pairs, right? That means USD is gradually coming back to life, right? It's gradually being strengthened. So do you think we should jump in on this? Of course, this is a very strong, powerful movement to the upside. So 15 minutes time frame for our entry. Okay, so of course we'll need some level of retracement. This now has gone far out. Uh-huh. Mm. So this is it. If one enters now, so let's look at it. Uh-huh. So what's the movement we saw for yesterday? Where is my tool now? So we saw up to what's the highest movement? 120 pips, right? 120 pips on USD JPY for yesterday. Now that's enough movement. Then for today, how many pips are we seeing? The market have done the market have done around 40 pips, right? So if today is going to look like yesterday, the market have only done 1/3 of that move. So does it mean the market will do the same kind of move? Come on, guys. This is a very strong upward trend, right? Strong upward trend. US is trying to recover all of its losses. So guys, keep this one in mind. USJPY, you're going to buy, right? So where are we going to buy? Let's try to jump in even much earlier, right? So the market may want to come back for this local, very small support right here. So let me itemize the supports that we are going to be looking at, right? So there's a balance pricing around this area. So there is no imbalance around there. Very balanced, very, very balanced. And so the next level would be around this level, right? So the next level will be around this particular level. But guys, we are looking forward to buy. We just want to buy. So guys, you've gotten the directional bias for Euro USD, GP USD, USJPY. Guys, we are buying. We are buying. We are buying. A lot of instruments we're going to be analyzing for today. Then before we now switch over and leave, so let me get the currency pair. So GPJPY, okay? GPJPY. Most persons here don't know when to put in questions, right? So let me tell you how we're going to do it. For most persons, by the time we just start by 8, they are already dropping questions. So, I mean, we are just starting and you're already dropping questions. So most people don't really know where to send in their question. If you have been joining us, you know by that we start as the custom is, I will first analyze those major currency pairs first, right? After I've analyzed those major ones first, I'll now take question, analyze the ones that you ask. Then before we now go to commodities, and if there is time, we enter indices. That's how we do it here. Because right now there are some questions up at this. I cannot be scrolling up like that. Now we just have 1 hour here. So please, thank you very much. There are a lot of persons here knows when to drop their question, right? So please drop it when you notice that I'm not asking for question, so that we don't go out of our line where what we're trying to achieve. So, Mr. Ayola, you are a big fan of JPY pair. So you say we should do AUD JPY, CHF JPY. Okay? So I'm just going to pick one because I think there is a lot of comment here, right? There is a lot of comment. Okay, Mr. Alebode, you're also looking at AUD JPY too, GP JPY, and Brown GP JPY. Okay. There's a lot on JPY. So let's do AUD JPY real quick right here now. So guys, so this is AUD JPY right here on the H4 time frame, right? Remember our custom. We will always try to look at it on H4 time frame. Guys, on the H4 time frame, this instrument is still strongly going up, as you can see, right? So all of these columns you'll see the activity for 1 week. So for 1 week, 2 weeks, 3 weeks, 4 weeks. Now there's no week here that the market did not go up, right? 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks. And this week, you can see enough movement the market have done. So guys, that alone has given you your directional bias, right? Remember, you can do nothing against the truth, but for the truth. In the same way, you can do nothing against the chart, right? Right? I mean, you cannot do anything against the chart. The chart is the chart. The chart tells you the truth of the market. That's why I use that statement. You can do nothing against the truth. So, guys, you follow what you see on the chart. So, guys, now even before this day, because this is already Thursday, right for Monday, Tuesday, guys, this is already on an upward trend. There's a lot of movement. I hope you have milk you have actually made with this instrument, Mr. Femi. Femi, I hope you have made this instrument. So, guys, if we are actually going to push ourselves to buy, is to buy. So let me zoom into the area. Let me zoom into the area. So you notice we got a break of structure here, right? So we got a relatively equal highs. Come on, guys, you remember rel, right? So the market gave us a rel right here, a relatively equal highs. Man, I like this instrument too. Where's my text? Okay, fine. So we got a rel right here, discount price, really. So we got a relatively equal highs, right? So that's a money magnet, right? So if you like, you can call it liquidity. Okay, don't worry, I'll not type again, right? Mm. So that we don't, it doesn't take our time. So we got one here, and guys, by the time you see this in the direction of the dominant trend, guys, that's a money magnet. Then of course, what happened next? The market actually sucked and licked up this liquidity, boom, to the upside. So strongly going up, I can tell you that. Now, so we got this impulse, we got this retracement to the downside. Now you see that retracement on Fibonacci is just 23.6 retracement. So by the time you see 23.6 retracement like that, it means the trend is still in force. The trend is not it's not being weakened. It's, the momentum is high. That's the word. So let me measure it so that you see. So from here to here, that's a 23.6% retracement. So yeah. From here to here. Can you see it? From here to here, that's a 23.6% retracement before boom to the upside again. So that tells us that hey, the momentum is strong, right? So guys, that momentum is still there. So so we got a retracement here to this level. This becomes our strong low. And of course, the market has given us a bullish candlestick, right? Confirming that this level is holding. This level is holding. And guys, if this level is holding, what are we waiting for? And of course, moving average is also showing us that. So guys, let me just drop down real quick to 1 hour time frame so that we can see this for ourselves. So the reason why we drop down to a lower time frame is to get so that we can see some already established local levels of support and resistance. So for this our case now, we are looking for local levels of support, right? So you can see this local level of support right here. The market have already used it, right? The market have used it already. The market have used it, right? So that's one level of support. This is another level again of support. So these are the levels that you're looking forward to buy, right? Now, but then you can see jump in because the market is trading below the opening price. So these are the different levels one can jump in, right? So these are the different levels of support one can jump in. So one thing you can do is that so that the market doesn't leave you an escape, right? So you can just divide your lot sizes, right? So let's say you enter with, let's say you want to do 0.1. So one can just enter with maybe half of it, maybe 0.05. So if it replaces again further, if it dips again, then you complete the lot size. Now, the reason why you do that is because maybe you don't want the market to just leave you, right? So whenever you have different levels where you're thinking or where you know that the market will actually move from, different levels, not just one. So you might just divide your lot size and enter at different time. Okay. Now that's for AUD. Now let's look at GBP. I hope you got some real value there, right? You got some value. Let's look at the GBP. A lot of persons ask us to do GBP, right? So GBP, JPY. So guys, real quick right now. So this is GBP, JPY. Let's go. So guys, on GBP, JPY, real quick on the H4 time frame, what are we seeing? Man, this instrument. So you can see right here that we got a high that actually beat this high. We got a new high that beat this high, right? So even though there are deep level of downward movement, corresponding downward movement, right? Or to seek for liquidity, to grab liquidity. But guys, guess what? The tenets of an upward trend is showing here, right? Especially the recent price movement. So recently, I mean for this week, we got a high that actually beats last week high. Sorry, week before last high, right? So that actually beat the last high, and that's the right word. So we got a high. This is the high, right? That beat these highs. Of course, that is our direction. So that's our direction. It's actually sloping upward, right? Then if you now zoom into the area very well for this week, for this week, you will see that H1 is actually looking facing upward. This is Thursday, Wednesday, Tuesday, Monday. So you can see, and it even started with a gap, as you can see right there, right? A gap up. So Monday is looking very strong, facing upward, right? Guys, like me, what I like to do, I trade the chart, right? I don't trade sentiment. I trade the chart. I trade what I see on the chart. So what are we seeing on this chart? We are seeing that this week has been bullish. Because currently the market is trading right now. Current market price is above the opening price of the week. And we are seeing a very strong bullish movement. So we saw a bullish Monday. Am I correct? We saw a bullish Monday, bullish Tuesday, a bullish Wednesday. Guys, what do you think today will look like? So from the chart, it will most definitely be bullish, right? Uh-huh. But that's not 100% of the time. Of course, you cannot be right 100% of the time. But from what we are saying, so look at what happened here. The market came down, right, to take out this low. Mm. So the market came down to grab a liquidity here, and it has done that already. So for this one, guys, I would like to jump in, right? So put a stop loss just below that low. You know why? The market has already taken out this low. So it gives you confidence to use this level as a stop loss. You know, of course, we are targeting the next available liquidity, right? The next available high. So we have done GBP, guys. We have done GBP, JPY, right? Okay. A lot of persons ask for GP, JPY. Guys, we have done this. Our directional bias is actually a buy there. Mr. Brown. Brown, how are you now? Okay. Mr. Onyi. Wanyo. Wanyo Onyi. Yeah, sorry if I murdered the name. So Mr. Tunji there, I don't know whether Tunji is still here. So he said on GP was how do you on GP was buying against other pair, but was selling against AD. Of course, AD is stronger than GP. That's what it means. So there is a website you can check the strength, right? The weekly strength of currency pair that it serves as a currency meter, right? You can check the weekly strength of currencies, right? So you can go to investing. Is investing okay? Yes. Finviz, right? So www.finviz, Mr. Tunji, right? So Mr. Tunji, Mr. Tunji, I said www.fin. So this one website you can use, right, to check for the currency. So it's very possible, what you said is very possible that GP can be strong against other majors, but AUD is beating it. Very possible. In fact, that is why we trade, right? That's why we trade. So, Mr. Brown, right? Mr. Brown, you say, but looking at GBP, JPY, shouldn't the debt cost be considered? Of course, it can be considered, right? Now, the analysis I did here, you notice I did not just do analysis for only today. So it is not today only that gave me the reason to buy. We looked at for the week what the market has been doing for the week. We also consider the dominant force. Remember, moving averages are lagging, right? So we also consider the dominant force for the week, right? So we also consider, hey, even if I have a drawdown, is there a hope for the market to turn? Yes. Why? The market has been bullish throughout this week. That means institutional traders are still looking forward to, hey, that thing is still going up. Let's go and buy. So that's the reason. So I not only consider moving average. Now your analysis is only looking at moving average. Okay, so there is no confluence in your own looking at only moving average. So guys, Mr. Brown, thank you. Now, but you can sell. Oh, you can still sell and make profits. Then my own can still turn later and give me profit. Oh my God. Okay, now, what else again? Okay, let's leave currency pair now. I think we have done a lot on currency, right? Let me look at the comment section. Okay, fine. So I think we have analyzed everything that we need to do on currencies. So if you have any other currencies that you have in mind, you just go straight to 4 hours time frame. You look at the dominant trend first. So you do 4 hours time frame. Look at the dominant trend first, right? Then try to follow that dominant trend. Very important. Try to analyze the market and follow that dominant trend. Okay. All right, guys. So let's leave currency pair and let's enter the world of commodities. Okay. So which commodities are we looking at? I think last time I analyzed gold, silver, and the rest for us, right? So on the 4 hours time frame, let's look at silver very quick. Silver is pretty much the same thing gold is doing, right? So when gold was trending, running upward, silver was following it the same way. Mr. Hassan, can you please drop a question? You're raising up your hand. So I've asked you to drop a question. That means I'll be looking forward to your question. So we got a very big nosedive right here, right? A very big run. Now, all of these are liquidity drive. It doesn't mean that silver and gold will not start going down for 1 month, 2 months, 3 months, 1 year. See, if you look at the weekly or the daily movement right here, can you see this movement? It's a very powerful spiral going upwards. So all of these are hunts, right? Strong hunt showing that, hey, people are getting more confidence, or there is a renewed confidence on the dollar, right? There's a renewed confidence of the dollar because generally with the world over, a lot of investors have started losing confidence on the dollar. So that's why they were shifting their interest to they're shifting their interest to other safe haven assets like the gold, the precious metal, and the rest. Okay, so all of these are really hunts. So, and of course, big traders, institutional traders will be looking at this at a cheaper price. The market is offering you cheap, cheap. The market is saying, hey, are you interested? I have some cheap articles. Are you interested? That's what the market is trying to do there. Oh. So I'll be looking at this as the market offering us some discount, right? That's what I'll be looking at. I wouldn't want to position for a sell. No, uh, I like to follow the dominant trend. I wouldn't want to position for a sell. Now the market, now these lows are actually interesting low, right? Of course, these are interesting times on the market. So these lows are actually interesting low, right? Because this low took out this low. This particular low was able to take out this low. And of course, it went up, came back again. So guys, I'll be looking forward to to position myself for a buy. Still a buy. Why? Because the market has offered a lot of discounts. There's a lot of discounts. The market has dropped very well. So silver is trading at 79, something that touched $100, even past $100 to $120. That's trading at 79. So the market has given us a lot of discounts. The same thing with gold. But all of this discount is not for a trader that has just 100,000 as capital or 200,000, guys, you cannot enter this area with small money, right? So you enter with big money. So if you take a buy and place your stop loss here, it's still big money. Otherwise, you wait for it. So one of the ways you can trade all of this is you wait for you do a lot of waiting if you have small money, right? You wait for the market to really dip and come down to take a low. Then of course it gives you what I call good risk to return. Let me show you. So let's take out these and these and these. So just imagine positioning, just imagine buying at this low, right? Buying at this low. Your stop loss will just be your stop loss will just be as small as this. Then of course you'll be targeting the this other high, you'll be targeting this high. So this alone is already 1:5, right? If no 1:6, you can see. So it's not still it. Let's go to 15 minutes time frame and see what it holds for us. So the 15 minutes time frame, this is what it looks like, right? So there are two ways to do it. One is to enter immediately and still put stop loss just below this low and target this high. Then the other one is to wait until the market does something like which it may not do, right? So two ways of entering this one is to enter immediately or wait for this kind of move, right? Two ways. So if you have two ways like that, then you want to divide your lot size, you enter a particular lot size, if the market give you more discounts to buy more, then you can buy more. Or if the market dips more, then you can buy more. Okay, so let's enter one. If the market dips more, then we can buy more. Okay. So you can see just this small lot size is about 400,000 on 0.01. So it's not so silver is not actually a playground for everybody, right? So if the market dips more, so you can see this take profit is already 700,000 or 800. So guys, if the market dips more, now when we trade like this, it's not that I wait until the market gets to my take profit. No, once the market starts giving profit, you start protecting the profits, guys. Now, I think that's for silver. Let's look at gold very quick. So gold is pretty much the same way. Gold have done a very big dip, right? Very big dip on the market. So if you notice here, yes, the gold actually did a gap up, and of course, crush all of those low in search for liquidity, right? So gold actually took out. Gold is just trying to recover all of its losses. Did I say loss? Loss. Good is to say all of the upward movement that everybody was basking trading gold. Now that gold turned, most persons never knew that gold has turned. So guys, one have to be very careful trading gold this period. It means you have to trade with a very tight. You have to trade with a very tight stops, right? Very tight stop, very tight stop. So what happened between yesterday and today? We saw a low, and this low was the low of yesterday, and the market actually took it out. The market took out this low before started going up. So then for today, after taking out that low, you notice the market gave us a high, and gave us a new high. So therefore, the market have done what we call a change of character, right? It gave us a high and gave us a new high. So if you look at it very well, we are actually doing a high. Then of course, gave us a low, right? Then a new high. Can you see that? So it means we are already seeing some kind of momentum, right? Especially the fact that we just destroyed this low. Okay, so it's actually one has to be very careful in trading gold this period. Very careful, just trade with a stop loss, right? If you know you don't want to put stop loss, then you just stay away from uh, silver and gold, or stay away from these higher instruments. Then you trade a major currency pair, right? So if a trade is entered here now, you have to put a stop loss, guys. You have to put a stop loss. You have to put a stop loss. Why? Now this big movement to the downside, right? So the market will have to still go up before it will continue going down again. That's if the downward movement is still there. Okay. Now, but for the fact that we just destroy the yesterday's low, it means the market have tapped the liquidity there. It want to reverse a little bit. So it has tapped it, right? It want to reverse a little bit. So a buy trade here will not be a bad one, right? Then of course that buy will be targeting these highs. So maybe to target this high, something like this, target this high. Then if they're depending on the news, it may not drop again, something like that. So, but for now, we're not going down because we have already taken out this low. So the market will need to seek another liquidity. We have destroyed this one already. The market we need to seek this one first before going down. Okay. So let me position myself for a buy there. The market will need to seek this one before going down. So one can use a very close stops or even this one. This one is 120. Okay, let's stay with this one. So guys, I think we have done good. Which other instrument do you have in mind for us to analyze? Okay, someone is saying we should do, is it copper? Okay, our son, we have analyzed gold just now, and we have done GBUSD already. Okay. So someone is saying we should analyze D30. Who is that person? Okay, US 100. Ecolanus. Okay, Mr. Tunji, Olatunji. Oh. So D30 is dropping heavily right now. So on the H4 time frame, guys. So on the H4 time frame, we have a lot of whipsaw right here, Mr. Tunji. This is H4 time frame. Now you see this particular direction right now, the market is kind of so look carefully because it's not too clear like that. So there are market structures that look smooth, clean, and clear. This one does not look smooth, though, does not look clean, does not look clear. So one of the things you would do whenever you meet a market structure that looks confusing like this, okay, I can tell you this one looks confusing. This, just watch carefully. Your structures will help you, right? I know by looking clean, clear, you're looking at very fine aesthetics. No, this one does not have any fine aesthetics. The market is just going up and down. So one of the things that will help you is look at the left-hand side and identify any high and low. Beautiful, guys. So I'm identifying this particular high, right? This high. Then still at the left-hand side, identify any high and low. So I'm seeing this one. I'm seeing this one, and I'm also seeing this one. So what has happened recently is that the market have taken out this low. The market have taken out this low, this particular low, to form a new low. Guess what? That same move took out this high and form a new high. So we have taken out both low and high. So where are we going? But let's look at the most recent one. So the most recent one between these two is this one, right? So this is the most recent one. So the market just recently took out this particular one, right? So if we draw this to the future, expand, you notice that the market is trying to form a range. but we know D30 that it can hardly stay inside the range for a long time. So two things we can do is that number one, this green area is a very wide fair value gap, and the market have reached there, right? So two things we can do: the market will do something like this, right? Do something like this, and before it can drop. So since we know we are in a range meaning that we are expecting the market to come back to this level before going on up again, right? But it can come down, but it may not. It may need to go up. So you may want to take a screenshot of this and maybe cross check when the market move later today. So the market may want to go up to test this particular resistance before before dropping again. So we're expecting a drop. And no, if we say we're expecting a drop, most people are just expecting it to just do through. No, it's not like that. Though. The market will need to create some internal structures. So these are the internal structures. So it will need to go up again before it will drop. So we are expecting a buy to sell. A buy to sell. It's a buy to sell. It's a buy to sell. But if that buy to sell does not happen, then we'll just be having an outright sell. That means our bias is a sell, right? Our bias is a sell. That's the first thing you want to get. Our bias is to sell. A sell means we're expecting a drop to this level. Drop to test this level. So guys, thank you very much, guys. I think we analyzed a lot of instruments for today. It just remains to enter agro commodity. I hope you got some value from it. Emmanuel is my name. So let me drop my number again at the comment section. 09026264507. So you can call me on WhatsApp or you can do a WhatsApp chat, Emmanuel. So may the market be with you guys, like the name sound, Emmanuel. The market will be with you. Profit will be with you. Chat me up, guys. If you have challenges, also chat me up. There is need to add more money to your trading account. Get across to your account officer. Get across to me. So thank you very much. Bye for now. So wait a minute, guys. For those of us joining us from Port Harcourt, we are having we're having Elite copy trading masterclass. So that means while you are trading, guys, don't just leave idle money in the bank. Guys, are we still here? Don't just leave idle money in the bank. No, you can put in those money, withdraw the money from the bank and put it as copy, right? That money can be copying and be replicating more money for you. You can copy a professional trader that is doing where you have seen the result of the professional trader, right? You have seen the antecedents, how the person has been trading, the profitability of the trader, the 5% weekly, the 21% weekly, the 9% weekly. You copy that person. So while you are busy doing your own manual trade, which most of the time you may not have time to, you're not physically available, your account is always trading. Come on, guys. So we have that seminar for today in Port Harcourt. We have it in Port Harcourt. So, guys, even if you are not in Port Harcourt, you can still call me, say, hey, Emmanuel, I want to do that copy, right? I want to copy. Advise me, which account should I copy that my money will be making more money? So those of us in Port Harcourt, please, the time is 10 a.m., okay? 10 a.m. Elite Copy Trading Masterclass. Thank you very much, guys. See you by 10.